Hi everyone, I'm Chris Heywood with Horizon Point Inspections. Today I got Brian and Tiffany with the Tiffany Collective on with me. And we just want to take some time to get to know Brian, his business, and just learn a little bit more about the market and the crazy market going on right now, especially in Cincinnati and across the country, just to see how he can help buyers and investors. And Brian, I just want to let you go ahead and introduce yourself a little bit, talk about your business, your background, and kind of how you got into real estate.
Sure, sure. So again, Brian, Tiffany, I have a team of five individuals, the Tiffany Collective of Coldwell Banker Realty. I'm a recovering banker. So step one is getting rid of the necktie. I did that for 40 years. Most of the time was in private banking. And during that time, that was at a time where I, as a private banker, was able to underwrite all mortgages, whether that be residential or commercial, especially with owner occupied buildings like physicians, accountants, attorneys, those type of folks. So did that for about 40 years. Got out of banking, joined Cincinnati Development Fund. So worked for a nonprofit lending company. And that's where I kind of caught the bug for Over the Rhine. And then it's 2006 to 2012 was president of the Over the Rhine Chamber of Commerce. And at that time, or during that time, 3CDC was doing a great job in renovating buildings and providing residential units. The challenge was at the time was how do we fill the storefronts? And so one of the things that we did at the chamber, we created a grant program to attract new businesses. And so I was spending a lot of time showing new businesses the storefronts. And then one day it occurred to me, I think if I get my real estate license, I can make a lot more than I am working for a nonprofit. So that's when I started in 2012, got my real estate license and started my career then. It was a good transition. It was an easy transition based on my past experience. And we now can do residential, we can do commercial investment, we do a little bit of everything every year for 13 years now. As I mentioned with my team, we have a real intentional focus to diversity and inclusion. I have built a team that represents different faces of our culture and our city, and they're uniquely positioned. I have some folks that I have one person that's now licensed in New York. I'm sorry, Northern Kentucky, New York. I should be licensed in New York. Um, Northern Kentucky. So, 90% of the business we do is referral. The rest comes from different lead sources. And so I think we're uniquely qualified. We've got someone in just about every aspect of our population that can address any of those needs, uh, be they Henrys, high earners, not rich yet, to folks that are looking for their first home. Um, I am certified as a certified designation as a certified luxury marketing specialist. I also have my certified international property specialist so that we deal a lot with people that are relocating with Procter and Gamble and GE and Kroger and those type of companies. We've built a good, strong business in that regard as well. And then also we're huge fair housing advocates. I have my at home with diversity designation as well. So that kind of sums up what we're doing these days.
Yeah, it's a lot. So with that experience that you had with before you got into real estate, do you think that sets you apart a little bit from other people and other agents in the Cincinnati market? And how's that kind of add value for your clients?
Yeah, it does. Only because, I do have a couple of members of my team that I've been able to share my past experience on how to do an investment property deal. A lot of times when people are looking at investment property deals, they want to see what the cap rate is. And so we've spent a lot of time educating the team on what a cap rate is and why that's so important to an investor. On the commercial side, we're able to look at properties and ask the listing agents for the commercial properties the right questions so that we can determine that that's a good prospect for our clients. We have one commercial client that we did, I think 2 years ago, about $4 million in acquisition just north of OTR. So again, I think my past experience and familiarity with that neighborhood really came in handy, and it not only allowed us to structure the purchase properly, but also I had enough background of that area that we knew the right questions to ask. And I think that makes us different. That makes us different, that you got to know the right questions to ask. And it also, during a time when there's very little residential inventory, it gave us an opportunity to continue to, earn an income and provide an income for our business and support our business. So, any investment person will tell you, you've got to diversify your portfolio. And we've learned how to diversify our income stream, and it has helped us be very successful.
Yeah, with your past experience, it definitely helped you a lot. For the investors listening, can you tell them what a cap rate is if they don't know?
A cap rate. Oh, I knew you were going to ask me this question. So when you're trying to find the capitalization rate, you're looking at whatever the purchase price of the property is. You also want to look at what the net income is, and there's a calculation you can do, and that's how you come up with what the capitalization rate is. And I would say right now you're probably looking at 6.5 to 7.5% in a cap rate. There are those that are much lower. And in a case like that, where our clients are looking at that property where the capitalization rate is lower, the first question is, what's the upside potential in increasing rates, which would help you significantly increase the income, the net income for that. So, we're able to help them do through comparative market analysis to see if there's potential for increasing the rates. And then in addition to that, what type of additional investment will they have to make above and beyond the acquisition cost to earn those higher rent rates.
That's great. And I think a lot of investors today, people think, I'm going to buy a 4-family, I'm going to buy this. They don't think about any of these things. It's like, hey, buy a rental property, put 4 tenants in it, and I'm just going to make money. It's just
right.
That's a lot of the stuff that the weekend warrior mindset, right?
That's right. And I can tell you from my own past experience of being a landlord. Actually, I'm still a landlord in our building that we live in here in Mount Adams. But as a landlord, those 3 o'clock in the morning phone calls because the toilet's clogged or the electricity's not working or whatever. When I have someone comes to me and they say, I want to buy my first investment property, I spend more time kind of talking through those issues than the financials on it, because I want them to have a realistic expectation of what life is going to be like as a landlord. And I will also say that there's some risks in becoming a landlord in terms of if you have someone that you have to evict. It's not easy to evict someone these days. There's a lot of guardrails and hoops that you have to jump through in order for it to get to that point. And normally during that time, you're not earning the amount of income that you thought you'd be getting for that.
Yeah.
I will also say this, that I was surprised during the pandemic that we didn't see more investment property come on the market. And we just didn't really see that. And so as I started asking around to different people, why aren't you selling your buildings? And their response was, well, first of all, some of these tenants can't pay the rent by no fault of their own. It had nothing to do with a decision or that they've made. And so, we decided to just hang in there with them. It didn't make a whole lot of sense. And so I think overall, most landlords were fair in that respect. And they understood that this was beyond everyone's control.
Yeah.
And they looked for ways to make it work. I know it had to be tough for a lot of those folks that were still making their mortgage payments on their investment properties.
Yeah.
But if someone would have said to me, 10 years ago that we would have been in a position like that, it would have been a shock to me. I don't think anyone saw that coming.
No, no. And speaking of the pandemic, that was record rates we saw
Yes,
3%, 2.5%. And now they're going back up.
right.
Really, I mean, you would say in a normal market, that's not a bad rate, 6.5, 7%, right?
Correct. Correct.
Um, but low inventory.
That's
And
right.
what I
That's right.
understand, inventory is so low because 10 or 12 years ago during the recession, a lot of builders got out. So the number of homes were built over the last 12 years had just decreased. So
Correct.
now we're stuck with this low inventory. So that leads me to the next question. What would you describe the current state of the Cincinnati real estate market because of those issues? And we talked
Yeah.
about before this, we talked a little bit about like how to handle that, but just kind of go into it for our listeners about how they can kind of, should they move now? Should they wait? Because the interest
Right.
rate's going up or not.
Yeah. So one thing I'll just kind of go back to the time during the pandemic. One of the things that we saw during that time is there were quite a few huge investors that were clearly overpaying for single family residents because it was their intent to buy them, slightly renovate them, and then start renting them. And what it did is it boxed out a lot of home buyers, not just first time home buyers, but home buyers in the 300 to 500,000 range as well. So it just added to the pent up demand for those type of properties. We're continuing to see those type of properties. I mean, you look at the stats right now, and anything in I would say the 150 to even 500 and 600 range. Um, if it's if it doesn't have some kind of structural defect, um, and if it's not completely overpriced, there's a good chance that property is probably going to go into multiple offers. I know that there's been some agents that have used a strategy to list the properties at a slightly lower
Mhm.
rate, hoping that there will be multiple bids, and it's continuing to force some of these first time home buyers to make 3 or 4 attempts at buying a house before something actually hits. And so there are some ways that if you're a buyer that you can try to mitigate some of these risks. I would say number one, what we're seeing is, being a boomer myself, we're starting to see some boomers that are able to step up for family members, for first time home buyers, and maybe leverage their investment portfolio or use some cash to facilitate the purchase of that property for the first time home buyer. And then, we put them in contact with a lender that is ready to refinance that property for those first time home buyers and allow them to return the funds to their family. So that's just one idea. I know there's not a lot of people, especially right now with the economy and the stock market the way it is, that may restrict some people, but it's definitely a one strategy in which you can do that. Another strategy is, how can I structure this purchase to make the highest impact? One might be increasing the size of the earnest money. Sometimes that makes a big difference for someone. It shows that you're serious about purchasing that house. Another might be inspections. Now, I want to go on record right now. I would never suggest to anyone to buy a property, especially if you're a first-time home buyer, to not do inspections. You've got to do it. It's critical. Now, what you can do is structure a deal that says, um, you know, we're looking at this property, and let's say it's 250,000. And maybe I have a family member, or I have a spouse who's very handy and can do some things around the house. You could do something to where you would say, we'll purchase the property and do inspections for information purposes only. Um, but we retain the right to terminate the contract if we're not satisfied with the inspection results. And in the purchase contract now, there is boilerplate documentation or boilerplate language that basically says, in that case, unless it's a safety or a structure deal that's undisclosed, and then we see it in in the inspection, then that keeps the door open where you could go back to renegotiate on something like that. But that at least tells, that's one strategy of where you could make your deal a little more attractive. And obviously, anything that you can do to shorten the time frame with your lender to try to get that deal purchased as quickly as possible, you can. If you are able to pay cash, a lot of times there are ways that you can waive the appraisal, because obviously the only time you need an appraisal is if you're working with a lender. Now, let's talk about the next issue that might come up. And that is, let's say you've made 3 offers, you've not hit on any of them, you're on offer number 4, and now you can put in place what's known as an escalation clause. And you might say, okay, the list price is 250. We're willing to go to 260 or 10,000 above your highest offer with a cap, and you can put that cap in anywhere. And then that's the escalation clause. So that's basically telling the seller, I'll beat your highest offer by, let's say, $10,000 with a cap of 280. Then if they accept that idea and you win the bid, they have to provide a copy of the bona fide offer in which triggered that escalation clause. I think escalation clause are one of the few strategic ideas that buyers can use to their advantage right now. And I know sometimes you'll see a listing agent that will say, no escalation clause. Well, I understand why they're putting it in there, but that would not stop me as a buyer's agent to putting that escalation clause in there.
Yeah. 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 I mean, and you talked about some of the struggles that buyers are having. You said, the 3rd or 4th house they put an offer in. We've done a number of inspections for people that are on like number 6 or 7 because of the low inventory. And so with that, are you seeing buyers that are like at number 5 or 6 or 7 houses they've looked at, put offers in, either lost it due to bidding or they lost it because of inspections and they walked away? Do you see those buyers just getting out of the market? Has there been a big decrease in buyers because of that?
So I haven't seen that many just kind of throw the towel in. I've had a couple over the last 2 years that have done that. And basically it was a decision that we both came to. And I think that's what also sets us apart from a lot of our competition is we're consultative salespeople. We don't need this deal to go through in order to survive. And we're able to consult with them and talk through it with them and say, look, we know this has been super frustrating. Maybe you guys should take a little bit of a rest and let's see what happens in the market. I was in that position towards the end of last year, and I was very hopeful that, we were going to see interest rates come down, the economy to continue to grow. And of course, at this first 100 days of 2025, it has not worked out that way. So those frustrations are continuing to be there. And I'm not quite as hopeful as I was that we might see things change and might see interest rates come down. I will say this, my first job in banking was in 1980. Prime rate was 21%, and mortgage rates on average were 16%. So having lived through that time, 6.5%, 7% money, it isn't 2 or 3, but it's not bad. And so I think, I guess what I'm trying to say, I don't think a buyer should be afraid of 6 and 7%. I think if there's a way that you can find a home within that interest rate range that checks all your boxes, go ahead and do it. I think there's a better chance that in 4 years or so, you may have an option to either refinance or at least build some equity and be able to, move on to your next home. And I tell a lot of first-time home buyers, this is probably not going to be your forever home. So find something that checks all your boxes right now. Your life is going to change. We still see people that have to move because of a job, because of family growing. whatever the case might be. And there are still ways to find properties. One of the best ways right now is off market. And that's something that we're really good at. We've got a great sphere of influence. So not only always contacting our past clients, but within our sphere and just saying, hey, I've got someone that needs to be in your neighborhood. If you're looking to sell, let me know. If you know of a neighbor, let us know. We're getting some referrals that way, but we're also very good at networking, not only within Coldwell Banker, but with our colleagues in this business.
Right.
And we're able to find some things on occasion off market that makes sense for everyone. So,
Yeah, and that's one thing that, like you said, with your colleagues, there's other agents you obviously are in competition with, but you also collaborate with them, and you have
yeah,
a big network, and you probably talk like, hey, if you know anyone looking in the Mount Adams area, I know someone's getting ready to sell in a month. Boom, you tell your network, and that right there is getting you the leads.
exactly. And we spend a lot of time making sure that we have good relations with all our competition. Those folks that are competition are going to sit across the table from us one day.
Mhm.
And so when we get into, there's always challenges that come up on deals, either over inspections or terms. We're always looking for ways to create a good relationship with that person, remove the emotions out of it, and remind each other that we're both trying to get to the same place. You have a client that's trying to sell or buy. We have a client that's trying to sell or buy, and we're a team. We're a team, and we're going to cooperate with you, and we're going to find ways to make the deal work. And one of the things that we always try to do is make sure that we're checking in with those other agents on the other side to make sure, is everything okay? Are you and I communicating properly? Do you want me to call versus text? How do you want to do that? It's so important right now, and we're really good at creating good relationships with. Um, I don't like to call them our competitors, with our colleagues with other
Yeah,
companies. We'll refer to them
collaborations,
that way. It's so
collaboration.
important right
Yeah,
now.
yeah. Next question, and kind of going shifting to where where you kind of focus a lot of your business.
Right.
For people that are looking maybe in certain neighborhoods or parts of Cincinnati, what can you tell them? Like, what are some great areas that offer some good opportunity right now?
So that's a really good question. I will start by saying um, we do a lot in consulting with our clients about what their lifestyle is. A lot of times you'll see people that, especially that are coming in with Procter and Gamble. Everyone knows they're probably going to be in a 3 to 5 range in terms of the time they're going to spend in Cincinnati. I think one of our goals as real estate agents needs to be, how do we hang on to that talent? How do we show someone who's coming in from maybe Washington, D.C., that Cincinnati can compete with
Mhm.
Washington, D.C.? So we spend a lot more time talking about, what is your lifestyle? We don't really say, well, talk to people that you're going to be working with and find out where they're living. That's not necessarily appropriate. And I've seen too many people that have come from big metropolitan cities, moved to Cincinnati, and they're in Mason. Now, nothing's wrong with Mason. Don't misunderstand me.
Yeah.
But these were folks who were used to walking to restaurants and walking to work and taking the train and those type of things. So, we spend more time talking about that. In terms of when someone comes to us and says, I just have a recent client that is moving here from Dallas, and she said, where should I move? So we went through the lifestyle. And then we spent a lot of time talking about, well, tell me about, what your dream house would be. Is it brick? Is it a 3 bedroom? And then we get that type of information to find out what is important to them. And then we can recommend different areas. I see we're seeing Oakley, Madisonville. Those areas are being revitalized. There's a lot of growth, a lot of affordability in Madisonville. East Walnut Hills is another area that continues to revitalize, and we're seeing a lot more multifamilies come on in all of those different markets. So we're seeing a lot of opportunities there. Hyde Park continues to be important for a lot of people. The location, Pleasant Ridge, Amberley, Silverton, Kennedy Heights. We're seeing lots of opportunities happening there and a lot of revitalization in their business districts and in their neighborhoods. Downtown and OTRs continues to be hot. We're seeing price tags in OTR that when I was at the chamber in 2006, if someone would have told me that a single family resident on 15th Street sold for $1 million, I would have questioned their sanity. But it's happening, and it's great, and we're continuing to see revitalization in downtown and in OTR. So I hopefully that answers your question to a certain
Oh
extent.
yeah, yeah. I think
Yeah,
that really focuses on your area, like Mount Adams, downtown Oakley,
right.
all those areas of Cincinnati that you really do focus in, and we've done a lot of work for you down those areas too. Let's shift to sellers a little bit. What advice do you have for sellers right now that are like, well, we've got a 3.5% or a 3% interest rate. We want to move, we want to downsize, but we don't want to pay a higher interest rate. Should they wait? Give some advice on that if there are people on the fence with listing their home.
Yeah, so I think the critical part of that is, are we going to be able to find you a place to buy?
Right.
So we have to talk through that. The lack of inventory is definitely something we have to talk through. But people still have changes occurring in their family, people adding members to their family, either having children of their own, or we are seeing a lot of people having to bring relatives into their home, and we're seeing extended families. Really, the issue is at that point, we'll talk about, how is it that we can find something? I know the interest rate is going to be higher, but at the end of the day, when you start calculating those payments, there is a way that you can make this work. And it I don't want to say it's sticker shock. Um, and the other part of when you're in a situation where you're in multiple offers, the one uh, uh, advice I try to give someone or counsel them is, if they say, well, how far over should list price should I go? And I think there's two things to consider there. One is, if you've got a lender involved and the house doesn't appraise for that, you have to be prepared on how you're going to handle that. And in fact, in some cases, some sellers are saying, if we end up in multiple offers and you go over that, you've got to be able to provide me with some type of evidence that says you can fill that gap
Mhm.
between appraised value and where the purchase price is going to be. So that's something you've got to have in mind right from the very beginning. The other thing is, if this is not your forever home, and you're looking at going 15, 20, 25% over list price, the real issue becomes to that person, is the value going to be in my home in 3 to 5 years, which is probably going to be the cycle that you're getting ready to move out. You don't want to be in a situation where either a job or some situation causes you to put that house on the market in a year, 18 months, or 2 years, and you just haven't had the ability for appreciated market value to take place there. You're going to be underwater, and it's a no-win situation at that point. So we do a lot in terms of counseling people from
Yeah,
that
you're bringing money
perspective.
to the table again if you have to do that, right? Yeah.
Exactly, exactly.
And for us, for me, for example, for us to leave, and we have a low interest rate, for
Yep,
us to leave to go find something like our house, like our kitchen, like our backyard,
yep,
I got to go way above what I can afford, right?
right,
Because
right.
the buying power is not there for me as a
Correct,
buyer, but the
correct.
sellers can do it. So,
That's right.
um,
So in your case, I would tell you, sit tight.
yeah,
Let's
yeah,
get some stability. I mean, instability and uncertainty is what's causing a lot of people to just sit on the sidelines. I
yeah,
get it. I understand it. But there's always going to be a situation where someone has to make a change. And the best advice I can give you, whether you be a seller or a buyer, is use a professional.
yeah.
Hire a professional to take care of that for you. We'll get you lot more money if you're the seller, and we can help you negotiate as a buyer as well, help you avoid some pitfalls, and at the end of the day, make sure both sides have a fair deal put together.
Right, right. So talk about professionals, because I agree with you. Like going into the next question, it's obviously not just you doing all this work. You got a team behind you, but you got outside partners too.
Correct.
From lenders to appraisers, really, they're kind of picked by the banks, right? They're not really
Yep.
a team. Inspectors and stuff like that. So you've assembled a great team to not only help people find houses, help people sell houses, but once they do, there's more to it. So talk about having
Correct.
professionals on your team as far as
Yeah.
go.
It is critical. It is critical. You've got to have, um, you've got to have your entire team. It's important to have an attorney. It's important to have a real estate agent. It's important to have, for us, it's important for us to have an attorney. It's important for us to have inspection companies that we can rely on. And Chris, I got to tell you, one of the things and one of the reasons that we refer a lot of business to your company is you guys identify things, but you do it in a way that it doesn't frighten the buyer. You do it in a way that it is, it is done in a way that says, I'll give you a good example, knob and tubing wiring. I can't tell you the number of times that I've been with a new home buyer and knob and tubing wire has come up as an issue. And you guys are really quick to say, here, this might be an issue, but I'm not an electrician. And if you're concerned about this, you should hire an electrician to come in to determine, is it active? I mean, 95% of the time, it's not active. It's just people chose not to make such an invasive removal of that.
Right.
If it's not active, it won't cause you a problem.
Right.
But I've been, when I first got started, there were a couple of other inspection companies that, especially for a new home buyer, brought that to their attention and they freaked out and just let the deal die and moved on. So I have a lot of respect for you guys that you're not afraid to identify a defect or something that needs further observation.
Yeah.
But you do it in a way that says, here, this is something you might consider. If you see water stain, you're very good at stating this is an old water stain. It doesn't appear to have moisture in it right now. And you have a great way of trying to help them determine if it's something they need to take further investigation or observation.
Yeah.
Yeah. Lenders, super important. I think you have to develop relationships with lenders that you can rely on. And when they say, yes, we'll pre-approve that person and we're going to get this deal done, they have to be able to get that deal done. Now, there's always things that are going to come up in something like that. Good lenders look for ways to save the deal and make it work. Bad lenders say, oh, we're done. We can't do anything with this anymore. And so we pride ourselves in we've made good relationships with good people on the lending side. The other thing that I tell my team, and this was difficult for me when I first got into real estate, is I'm not a lender anymore. Okay. So I'm not going to advise you when it comes to anything that has to do with mortgage lending. That has changed significantly over the last 20 or 30 years. So I don't get really involved with debt to income ratios, any of those things. I rely on a professional who can do that. And that's why you need strong lenders that can navigate with your client through those things. So that's really important to have in place. Title companies, really important to have good title companies. I'll tell you, for example, I'll put a plug in here for Lawyers Title. They came to us in a meeting earlier this month and said, hey, we're just giving everybody a heads up. If a tax lien, a state tax lien appears on a title report, the state of Ohio is now taking 37 days to clear those tax liens. That's so critical to know that as you're writing a purchase contract.
Yeah.
You've got to at least make sure that you're allowing for that amount of time for a title search to get done. And you have to be realistic when you're dealing with the buyers so that they understand and convey that to the listing agent that this is in fact the case and we need to be prepared for it so
Yeah.
that we can manage expectations. Sure, there's always an opportunity to extend a contract, but it's so much easier, especially in these days, where you can address that up front, get it underway so it won't surprise anyone.
Yeah.
We're big on making sure there are no surprises for our clients, be it
Right.
a seller or be it a buyer. We try to navigate through that. And when things come up, we address it right away so that it doesn't sit there and linger. And then it's even a bigger surprise. And when surprises come up, we look for ways to mitigate those surprises.
Yeah.
So
Yeah, that's the one thing with lenders, title companies, insurance companies, and even inspection companies.
yes,
Of the essence, especially right now, like you gotta have good teams involved, and like you can't have a lender that's like dragging their feet and they're not getting stuff done at the 11th hour or stuff like that, or not finding out about these liens that are on homes in Ohio.
right.
It could lose the whole deal, right?
Yep. Yep.
So
I want to add one other comment.
yeah.
So we now at Coldwell Banker have we call it a customer experience provider, but now it's a concierge transaction coordinator.
Mhm.
So what's great about this is that Coldwell Banker, Coldwell Banker, I look as my business partner for the Tiffany Collective. They now have a system in place that once we get a deal under contract, we click a couple of buttons, fill out a couple of forms, send it on to the transaction coordinator. And now that person is following up with the buyer on when is the earnest money done? When is the inspection period over with? When do you have to meet with a lender? When do you have to demonstrate that you have an intent to proceed with that lender? How remember this closing date. So they're really good at dealing with that buyer. And what that does is it frees us up so that we can counsel with other buyers or other sellers to try to handle that. So that's really a kind of a newer part of what I consider part of a critical member of our team as we continue to push forward here.
Is that something new that Coldwell Banker's doing? Because that takes a lot of time that's a lot of, especially if you got a lot of buyers and sellers. Are it frees your time up to do other
It
things,
does.
right? The
It does.
minutia of all that stuff going on,
Yeah.
transaction coordinator.
Yep.
Are there multiple ones for
Yes. Yep.
okay.
And actually, this was something that was implemented, I think, maybe last year. And really it was something that it's absolutely a no charge to any real estate team, which is really nice. And there were some teams that had large teams that had transaction coordinators already on their team.
Right.
But when Coldwell Banker said they're free, it's available to everyone. It really changed the dynamic, and it builds good relationship with your buyer and your seller. And they know that they have another person that they can contact. And it does free up your salespeople so they can be out working on generating income
Right.
and generating business and helping buyers and sellers.
Yeah, being that consultant for your buyers and sellers,
Exactly.
transaction coordinator, right?
Yep.
Yeah.
Exactly.
Okay. So grab your crystal ball off the table there. Fast forward 6 or 12 months from now, where do you see the real estate market?
I don't see it changing much at all at this point. I really think that for the next 6 to 12 months, we're going to continue to see low inventory. Um, I would put one caveat in there, and that is if we see in May more inventory coming on, if people finally have gotten to the point where they said, you know what, this is nonsense. We have to get ready to go. And it's always been customary that spring is when everybody comes on the market. During the pandemic, there was no season. It was just, it was the wild, wild west.
Yes.
I am uh, cautiously optimistic that we may see that occur. I think if that happens, then we'll see many more opportunities for people to list. It's kind of the chicken and the egg. If we have someone that's willing to list, if we see more inventory where they can buy, obviously that's going to create more inventory for others to buy.
Right.
So I am hopeful, and if we see in May, I think May is going to be a critical month in terms of trying to anticipate what might happen for the rest of the year.
Right.
But if we don't see that happen, I think we're going to continue to kind of see things what I would call stagnant. Um, I even think that we may, even if there's maybe a quarter to a 0.5% interest rate drop, I'm not sure it's going to have the same effect unless we see other components of the economy following in that footstep.
Yeah.
Which means, a strong market. I think there's a lot of question marks about tariffs. And frankly, the fact that the tariffs are changing almost on a daily basis doesn't provide stability or certainty.
Right.
It just exacerbates that. So anything that could happen in the economy that would indicate any type of stability and certainty, I think that would be you would see a dynamic shift in the market take place.
Yeah. Makes people feel a lot more comfortable when they're
exactly. Yep.
Well, I want to thank you for meeting with me. I do want to say you can see from you've been in this business for a long time. Started in banking, your experience there, coming into real estate, it just is a great fit for you. But also businesses that made it through the last 5, 6 years of this crazy market, it just shows your stability and your model is really strong. Your networking is really strong. So people that want to use you know that you know the business and you're not just some fly by night
correct
agent or a company. You've probably seen it, and I know I have. In 2020 and 21, the number of agents in our market just went skyrocketed.
right.
And
Right.
I think, I don't know, maybe in the last few years, they just dropped back down, right?
Yep.
So
Yep.
that just is a testament to your company that this is not an easy job. It's something you guys really enjoy doing. You have
Right.
your niche and what you guys really work on, and you're good with your clients with that stuff.
Yep.
And it's carried you guys through all this craziness and everything. So
yeah, and I want to just make one other quick comment. So, one of the things that you'll never hear from the Tiffany Collective is how many units we've sold in a year. That's really not important to us. Okay, we've always been a relationship driven company. Relationships are critical. You don't do 90% of your business on referrals unless you have strong relationships. And through our spheres of influence, with our relationships with lenders, bankers, you name it, we've developed really good relationships, and that's what allows us to perform at the highest level that we can. We go the extra mile. A good example is I just had someone that moved here from Boston. We found him a house because of his family location and what have you. Even after the closing, we were meeting painters in his home, gaining access to him. We were making sure that things were getting done even after the sale. And that customer looked at me and said, why are you doing this? We've already closed. And I said, well, first of all, it's just the way we do things. And second of all, if someone says to you, hey, I'm getting ready to sell my house, who should I use? I want you to think of me and the Tiffany Collective the first time.
Yeah.
And if they ask you why, feel free to tell them why.
Yeah.
We're looking at developing a relationship not only from a referral standpoint, but at some point you're going to have to move again. We'd like to be top of mind when that happens.
Yeah. That's great customer service, Brian.
Right.
You're not just there at the closing table and you never see them again. You don't just
Yep.
have them a gift. You're helping them afterwards, months afterwards. So
Correct.
and
Correct.
the successful real estate agents, that's what they do. They build relationships and they continue on for years and years.
Exactly. exactly.
Well, go ahead and just tell me again some information about how to get a hold of you guys online,
Sure.
phone number, stuff like that. People want to get a buyer or seller wants to get in touch with you about
Yeah.
consultation about either buying or selling a home.
Right. So my number is 513-675-5859. You can look at the Tiffany Collective. Just go to tiffanycollective.com. That's where our website is. My email address is brian@brianltiffany.com. Yeah, reach out. We're happy to help any way we can. But just be prepared to tell me more about your lifestyle and your budget rather than asking me, well, where should I go? Be prepared to tell me what your lifestyle is, what your design aesthetic is, the type of property you're looking for. Is it traditional? Is it transitional? Is it contemporary? That allows us to focus in on as we do our search, and then we start showing you, sending you prospective properties from there. And you can reach us, I'm not going to say 24/7, but we're available after 7 p.m. We're available on weekends. Um, and Send us a text message. We'll respond that way, and then we'll follow it up with the phone call at our first opportunity.